guys, welcome to navigating the 3Commas features jungle with the Trading Parrot. In today's video we're gonna focus on bull cycle strategies trading with bots, specifically with grid bots and DCA bots, putting an emphasis on the things that these tools can offer in the most bullish areas of the cycle. Let's start with the grid bots. You can find the grid bots on the main menu in this area. In a bull market there are multiple ways that you can leverage the value of a grid bot, and we go through a few examples. But before we get there, I really like this crypto screener that you get here on the right hand side when you're creating a grid bot. You can select multiple criteria for finding different opportunities, starting with trading view, buy and strong buy, RSI, and even finding the top 120-day back tests here at the top. I think one of the short-term greater opportunities to use a grid bot in a bull market is right after seeing a bull flag on a strong trend to the upside. For example, in here, Troy had a breakout and it has had multiple swing highs in the price action. Each and every single one of them produced some sort of bull flag that could have been traded by placing the grid slightly below the impulsive move on the expectation that is going to produce some sort of pullback, doing a bull flag, filling some of the orders of the grid bot, and then shoot back up for the next target. This sort of approach, of course, requires you to understand a little bit of TA, but thanks to this crypto screener, you can make that very easy to find. If you go to Trading View and you search for strong buy on daily, 4 hour or 1 hour, you get a great starting point. Something that requires way less knowledge and that still can leverage the power of grid bots during a bull market is to establish a range for a coin using a higher time frame. For example, the daily or the weekly. Many coins have already broken the highs of March, but there are many of them that haven't. An example of that is AVAX, that hasn't broken above the March high, neither has done it with the all-time high, but still having a good promising narrative. And this provides an opportunity for placing a wider spread of a grid depending on the expectation that you may have for the coin based on fundamentals and technicals. Following an approach longer term like this provides a longer ride that requires way less interaction and maintenance. Another alternative, way less known among traders, is to use the grid bot to actually distribute your coins, your holdings, your accumulation from the bear market. Not going very far, if you were accumulating AVAX and you are slightly confused on where am I gonna sell my AVAX, but you have some price in mind, but you're not really sure whether we're gonna get slightly short or too long on that target, you can place a grid bot to actually help you unload your holding on AVAX. For example, if I place it with the low price slightly above where we are and the high somewhere around my expectation of the target, I'm just gonna pick something above the all-time high. But if you watch my other videos about altcoins, you know I'm a big fan of the trend-based Fibonacci extension, and then doing something like this from the previous bear market to the all-time high to the bottom of this bear market, and then looking for the 1618 could be a great area to consider. Non-financial advice, but I'm doing similar things with other coins at the moment, and that means that the grid bot will capitalize not just on the price going higher, which is the case for just holding, but also it will take advantage of all the potential volatility that we might experience as we approach that target. You can do the same with the DCA bot, but the grid bot will guarantee that throughout the whole range that you deploy the grid bot, it will always continuously buy and sell the holding and taking small profits on the way up. Let's go to the DCA bots. DCA bots offer a lot of additional customization options, including technical analysis not just for the entry, but for the exit and for the safety orders. In today's video, we're gonna set up an example on Ethereum that we can use as a study case, and for that I'm gonna bring in just my all-time friend, the Relative Strength Index, RSI, and we're gonna do some analysis on the 4-hour time frame. My intention is that in this video you capture the essence of the analysis rather than the parameters, and I strongly encourage you not to copy the parameters, not because they are mine, but you should never copy parameters that are already public. The alpha of a strategy that becomes public, in my opinion, is never a great alternative. But you can use it as inspiration, modify it slightly from where I leave it, try it on other coins, maybe even different time frames. Just don't copy something that is already shared on social media. You can see the price action of Ethereum in the chart in here, starting from August up until today, mid-December, and you can see the RSI at the bottom. Let's change the color so you can see it better. The first thing that stands out is the fact that in the period from August up until more or less October, RSI was crossing below 30 multiple times, indeed 7 times. After October, things got a lot more bullish with this leg up in the price action and barely has hit the 30 one time. This change in behavior is natural from flipping from going sideways in bearish price action into a more bullish state. And if you do careful observation, you're gonna notice that on the 4 hour, the RSI, instead of coming very frequently below 30, now is only getting into the 50s and then back into the 70s. And that is repeatedly being done, oscillating from one side to the other, starting from the 3rd of November. Notice that this is the behavior on Ethereum on the 4 hour, and this will be different if you change to other coins. There are plenty of coins already outperforming Ethereum, and there are plenty of coins that haven't even managed to do what Ethereum has already achieved. So you have to find which ones are about to have this and which ones are way too overextended already to trade them in a similar fashion. So I'm gonna do something very simple. I'm gonna assume that Ethereum is gonna have at least a couple of more months, maybe just one more month, repeating this kind of behavior, and set up a trading bot using my paper account, using some very basic parameters. And for that, I'm gonna focus mostly on the entry and the exit. I'm gonna enable the deal start condition and look up for RSI, set it with 14, matching what I have in the chart on the right hand side, as well with the 4 hour, and using the entry crossing up the level of 50 in this case. Notice that you can use additional conditions in here. They work like an AND, so if you put many more, all of them need to be true at the same time for that deal to kick in. Safety orders is a big discussion for us. During a price action like this, safety orders wouldn't really make this more profitable, because pretty much in these areas of 50s, whenever we cross up, immediately after we get another leg up, and that's because we are still in a very bullish stage at this point in time. But going back in time on this area of May, summer, you can see that those entries wouldn't have been great. So it's key as well to do those observations in the chart and to practice as well with paper trading bots. DCA orders in here wouldn't really be great because the price after the entry doesn't really go that much beyond down to fill further orders. It literally just requires the first one to get filled, and then you get a nice move up of 15% and so on. Of course, the first push is 46%. At that point, it will be great to have access to a trailing stop loss, which 3Commas actually offers. If you scroll down in here and you enable the stop loss, you can set it as a trailing stop loss. This means that if you just use that entry and place your stop loss not too far, you can still capture most of the rally to the upside of 46%, because the trailing stop loss will follow the price going up. The only exception is if the price does a big pullback halfway through to the upside, in which case it might hit your trailing stop loss before you reach the final destination. Notice that I'm giving this example on the 4 hour. Why am I going so conservative? Many people that are new to 3Commas on the first month, they go straight for the 1 minute, 5 minute, 15 minute charts, setting up different bots on tokens they are bullish. And of course, you're gonna get loads of more deals coming in all the time. Your Telegram on your phone is gonna be constantly telling you that you are taking profits, making you feel good. The problem is that all that price action and all those results on the 15 minutes are going to eventually take a bad deal that, if it doesn't have a stop loss or any sort of risk management, could cause you to end up with a big headache as well. I think the 4 hour and the 1 hour gives you a lot more headroom if you are a person that is busy with the day-to-day, having a daily job, family and things to take care of, where you have that space in between deals to allow you to adjust things and also keep an eye on the price action. For example, in here you got 1, 2, 3, 4, 5 deals that you have entered, but as you were going up, the RSI has been coming down, indicating that there could be a little bit more sideways in here, maybe a deeper correction. I'm not saying that's the case necessarily today for Ethereum, but I just want to make a point that this started from the 4th of November. Now we are 1 month and a half after. You will have taken profits 5 times in a row. In the 15 minutes, all of this will have happened in just a couple of days maybe. And if on the second day you're busy, not paying attention, and you don't have a stop loss somewhere in here, not just for closing the deal, but maybe for stopping your bot and keeping your profits, then the market will make you pay for that. For taking profits, things can be as simple as going into the conditions, finding the RSI once again, mimicking the same time frame and length, and in this case, I'm gonna use crossing up 70, because as we observe in this leg, it crosses from 50 to 70. With the price action of Ethereum, I might not start my bot right here, but if I saw a breakout like that, I might have ready my bot to switch it on as soon as I see the breakout, expecting to have at least 4 or 5 great deals done in an automated way, including risk management and everything, thanks to the close deal and stop bot option that 3Commas offers. Notice that both grid bots and DCA bots are offering trailing stop loss, which, as we saw in here, would have been great to use it on this leg up where we didn't know precisely when it was going to stop, but the stop loss with trailing, as long as that deviation is set properly for the volatility of Ethereum, will have been able to capture most of that 46% to the upside. On grid bots, the trailing stop loss is great for not having to move the grid. If you're not a user of 3Commas, I strongly encourage you to have a look at the tools that are in here. Remember that there is a link in the description to get a nice discount, and if you are already a new user of 3Commas, welcome on board. I strongly encourage you in your first steps to create some paper trading bots that are free of risk. Look at the charts, cherry pick maybe 3 or 4 different indicators that you're gonna go full in depth understanding how they behave on different coins. I personally prefer RSI, stochastic RSI, MACD, QFL. I believe that with those 4 I can do pretty much everything on a trading bot. But if that is not your case, you get a long list of different indicators for the charts, and there are plenty of them already available out of the box on 3Commas to just select the parameters and get your bot running. I think a good plan is, once you start with 3Commas, create your paper trading bots, let them run for 1 month, make sure that they are exposed to some challenging pullbacks, which in the bull market we typically get once per month at least. And if they do survive, have a plan for deploying them. Think about how much funds of your account are going to be exposed to those trading bots. Assign a very small amount for your first bots, and don't fall trap into any FOMO of a bot that did slightly better than another, and then you deciding to give all your funds to a single bot. That is a no-go. If you decide to try 3Commas, make sure as well not to miss the educational resources available in the 3Commas platform. With them, you're gonna get a deeper understanding as well of all the tools available. Thanks so much for watching. I'll see you on the next one. Bye bye.